Ron Paul warns of dollar collapse 100% in 2018. China and Russia are preparing for a bankrupt U.S. financial system. U.S. national debt. When the government spends more than it collects, the result is additional debt. From the signing of the Declaration of Independence in 1776 until 2008, the U.S. accumulated slightly over $10 trillion in federal debt. In the past 7 years, the debt has nearly doubled to more than $18 trillion. By the year 2019, it is projected to exceed $20.3 trillion. When interest rates rise, the impact will be felt by the federal government as well as everyday Americans. First, it will increase the government's cost of borrowing, which will cause the debt to rise even faster. It's entirely possible that even a modest rise in interest rates could cause the debt to spiral out of control. This is because Washington is heavily dependent on borrowing to operate. Next, it will be much more difficult to expand or even maintain the welfare state. This fact alone will lead to mass riots as individuals who are dependent on a government check will take to the streets in protest. Also, the U.S. would have a more difficult time funding its presence, that is military bases, around the world. This would lead to a less stable socio-political environment and an uptick in radical behavior. Plus, a shortage in government revenue could result in a rather large tax increase and the eventual demise of the middle class. Finally, and as we've already seen, the federal government may decide to target 401ks and IRAs as a source of additional revenue. This could take the form of a tax or fee of some sort. Mr. Paul also mentioned the possibility of a tax on regular savings and other assets. If the government finds itself in a tight situation, as we've witnessed in the recent past, the potential intrusion could be severe. Is the U.S. losing its stature? In the post-World War II era, the US dollar has been the global reserve currency. Prior to that, the British pound filled this role. Recently, China has increased its trading with Germany, India, and others, excluding the dollar as the reserve currency. It seems the world is slowly transitioning away from the dollar. If this continues, the US could lose its position as the world's reserve currency. This would have numerous ramifications. A discussion on that is beyond the scope of this article. Mr. Paul also stated that 10 countries have already signed a document to begin phasing out the dollar as the basis of trade. Even the IMF has proposed a new world reserve currency system. The days of the US dollar as the world's reserve currency may well be numbered. Some argue that the US economy is on the mend and the stock market is near record highs. Therefore, things can't be all that bad. While there is truth in this, according to Paul, stocks have risen due to Fed policy and political leaders. He also stated that printing money has never solved this type of problem. Ever. He cited Germany, Russia, Argentina, Brazil, Chile, Japan, China, Ukraine, Italy, Ireland, Portugal, and Spain as examples of countries that had similar problems to the US and yet none of them was able to use the printing press to escape their problem. Source: Will the US follow the path suggested by former Congressman Ron Paul? Word of the day: prepare. And do it the old-fashioned way, like our forefathers did it and succeed long before us, because what lies ahead of us will require all the help we can get. The tech sectors is now getting hit with layoffs. The Dallas Fed survey is at a 6-year low and crashing. Manufacturing in a decline, which is signaling a major depression coming soon. The East know the West is now bankrupt and they are preparing and waiting patiently for it to be complete. Norway's biggest bank is now pushing a cashless society. The House of Saud will most likely contribute to the collapse of the global economy. Lira contagion: why Turkey's collapsing currency is tainting world markets. The Turkish lira fell by as much as 11% against the US dollar Monday morning, continuing a slide that started to alarm markets late last week. The lira's fall is now starting to take other emerging markets' currencies with it, and there are now fears for European banks, too. Here's a rundown of what's going on, and why. How bad is the slide? Pretty bad. The lira has lost around half its value against the dollar over the past year, and most of that is since the start of this year. Turkey's private sector debt is high, with much of it fueled by foreign money, and so is inflation, at an annual rate of 15.9% this month. Meanwhile, President Recep Tayyip Erdogan insists on the maintaining low interest rates despite criticism from financial experts. So the lira was already falling, but on Friday things really turned sour. That's when U.S. President Donald Trump doubled import tariffs on Turkish steel and aluminum, partly to put pressure on the country for its continued jailing of Andrew Brunson. Who is Andrew Brunson? Good question. Brunson is an evangelical American pastor who has been living in Turkey for a couple decades. He was arrested in 2016, in the wake of an attempted coup against Erdogan. Erdogan claimed the coup attempt was organized by an imam named Mohammed Fethullah Gulen, who is living in exile in the U.S. Brunson was one of many charged with terrorism after the episode, with the authorities claiming he had links to the Gulen movement. His case has been fervently taken up by evangelicals back in the U.S., who have pressured the White House to do something. Which it did. In the process, the Trump administration tore up the traditional separation between using sanctions to address foreign policy issues and tariffs to address trade issues. Trump's tweet announcing the doubling of tariffs on Friday followed a claim by Erdogan that Turkey is facing economic attacks, and a call from the Turkish president for citizens to convert their holdings to lira. The economic attack against us now is the same as the coup attempt against us. I'm urging our country to increase outputs, to increase exports, Erdogan said. The lira fell by as much as 18.5% on Friday, although it pared some of those losses to end up 14.3% down. What's happening in Turkey now? Over the weekend, Erdogan continued to make fiery speeches and the Turkish central bank promised a plan to help shore up financial stability. The first signs of that plan arrived Monday morning, including the easing of commercial lenders' reserve requirements, and a promise to provide all the liquidity that Turkish banks need. Treasury Minister Berat Albayrak promised there would be no capital controls, but the central bank has limited currency swap transactions. Before the central bank's announcement, the lira fell as much as 10% early Monday. Again, it pared some of those losses afterwards, to a loss of around 6%, but the ripples are becoming apparent. How so? Other emerging market currencies are suffering too, as investors put their money into safer currencies, especially the rallying dollar. South Africa's rand has hit a two-year low, and Russia's ruble and India's rupee have also hit their lowest points in a long while. And then there are the European banks that have lent to Turkish businesses, big time. These include Spain's BBVA, Italy's UniCredit and France's BNP Paribas. Those debts are largely denominated in dollars and euros, and are therefore harder to pay with a weakening lira, so shares in these banks are all down. The European Central Bank is worried about those banks' exposure to Turkey, and the euro is also now slightly down against the dollar, due to contagion fears. Shares are down in Asia, with Indonesia leading the pack with a 3% fall. The European stock markets are off slightly, and U.S. stock futures are a bit down too.